Hello and welcome to today's video. This will be the first video strictly related to AI segment. I see this as important as AI is already changing and will continue to change our lives drastically for better or worse. First project I will cover is related to AI frontier protocol Aethir, which went live on June 2024, and since its launch it has annual recurring revenue of 166 million and lots of other interesting developments I will be discussing in today's video. So without further delays, let's start. Before we start, disclaimer, nothing here is a financial advice, I'm just one person with a microphone, always do your own research. To look first at a bigger perspective, recently neoclouds or /Bitcoin miners, dual companies like Cypher and Iron are on fire, and it stems from one premise: there isn't enough compute power for the future of AI. One interesting information which I stumbled upon when reading Aethir's white paper is that compute required to train GPT-4 from GPT-2 increased in the range of 3000 to 10,000x, which equals training jump from preschooler to high school student. This comparison opened my mind and gave me an idea why compute plays are getting hot during the last couple of months. Now, what is Aethir's place in this story? Well, it is a decentralized Depin AI infrastructure. The idea behind it is that while there is and always will be place for centralized specialized data centers, what is then with all GPUs that are being underutilized as a part of different tech companies and enterprises? Well, this is where Aethir is trying to find its place by offering a way for them to provide their services by connecting them to a decentralized network. Pillars of Aethir ecosystem is laying in three core components: containers, which provide computer resources; checkers, which verify the integrity and performance of containers; and lastly, indexers, which connect end users with most suitable containers. The premise is simple. On the supply side, users register their compute resources with the network and stake Aethir token to become eligible for service requests, while on demand side, end users submit compute requests, which are then matched with the most suitable resource. The Aethir ecosystem is built around five main components: GPU providers, which supply the physical GPU used within containers; Aethir network, made from containers; checkers and indexers, which I described before; compute buyers and gamers, which are end users which request and consume compute power; treasury, which manages fees and allocates token to support protocol growth; and lastly, settlement layer, the blockchain infra that records transactions, provides security and scalability to the protocol. The whole system is powered by ATH token, and providers are rewarded in ATH for proving capacity, which is maintaining availability even when there is no active demand, ensuring GPUs are always available, and successful delivery of compute services and service fees paid by resource consumers. From tokenomics perspective, total supply consists of 42 billion tokens, but this can be understood from the standpoint that they are trying to build infra on a global scale. From investor standpoint, less attractive part is that their vesting continues until 2031, which means constant selling pressure on the token. One thing that I really liked is that they allocated 50% of total supply to checkers and compute providers, which means they are betting big on the community. While a lot of protocols would say they are also betting on community, Aethir with this move really shows this. What differentiates this token from most other altcoins is its clear use case. So providers stake it to provide compute, and users buy it so they can use compute, and governance arrives as a bonus. Selling pressure is one thing that remains a headache for this project, as it could keep price suppressed until there is enough demand. Now, everything I discussed here until now is a theory, and of course, in theory, everything sounds nice. Now let's go to practice and see how this protocol currently works in practice. Currently, there are around 12 billion tokens in circulation, and as this picture shows, around 1.7 billion is being staked, which is around 23% of staked tokens from total available. This is rather small staked sample, and it shows that large sum is unstaked, which tells a story there is a lot of selling ongoing. And for long-term success of this protocol, drastic increase in total percentage staked would be nice to see. Pools available are AI pool, gaming pool, and agent layer pool. What is also interesting that there is a possibility of additional airdrops from ecosystem partners depending on a chosen stake pool. APR are pretty good, 20% for gaming pool and 13% for AI pool. And this information is not fact checked, I was just playing with the pools, but if you choose the option to stake more than 1 year, I think 4 years is a max, APR is much better. Now, will this be enough to offset constant selling pressure is a good question, on which I can't offer an answer, unfortunately. On-chain activity, protocol is generating 166 million on annual recurring revenue, and if we measure it against fully diluted market cap, we get a ratio value of 8.43. This is rough equivalent of price to sales ratio in traditional markets. And if we would look at this protocol as a tech company, this would be an argument why this protocol is cheap currently. Other key metrics are 1.3 billion in total compute hours delivered, while total on-chain transactions equals 1.6 million, describing chain activity. One interesting observation is that compute providers are enjoying nice incentives on top of fees for providing the service. These incentives are proof of capacity and delivery rewards, which are higher than actual service fees at the moment, and even if those are just for the short term, it is very motivating for providers. But now the question is, what will happen with activity once these additional incentives are not as lucrative as now? Will service fees be enough to keep them around? One advantage that Aethir team mentioned in their white paper is price, and from this pricing illustration it shows that they can indeed offer better pricing compared to centralized competition for compute services like, for example, CoreWeave. I mean, this makes sense as Aethir protocol doesn't need to build physical infrastructure or buy GPUs constantly like CoreWeave, for example. Shifting to cloud gaming segment, I wasn't able to find exact pricing for Aethir service in this space, and I'm not sure if pricing from computing is the same as for cloud gaming. What I managed to find, however, is what is their centralized competition doing, like GeForce Now, for example, which offers their best plan for 22 euros monthly, which enables up to 8 hours of gaming daily on highest specs. Even if you take 1 hour per day, the effective cost is still less than $1 per hour for their service on a monthly basis. So this is what Aethir protocol is competing against. Lastly, Predictive Oncology, a small biotech company, recently announced strategic digital reserve investment of 344 million centered around Aethir token. This move not only positions Predictive Oncology as a significant stakeholder within Aethir ecosystem, but also shows one of the first movers from traditional markets to Depin projects. While the news is exciting and implies potential buying pressure for ATH tokens, investors should approach with caution. Fundamentally, Predictive Oncology remains a distressed biotech, unprofitable with debt exceeding cash reserves. Biotech and drug discovery are notoriously ruthless industries, and this shift looks more like survival pivot than organic growth. We have seen struggling companies attempt something similar with Bitcoin reserves in recent years. The difference here is that Predictive Oncology is betting on an altcoin Depin project, which, while offering a clear revenue model, also introduces higher volatility and a risk. And now to conclusions. First, Aethir represents one of the more ambitious attempts to decentralize GPU compute at scale with early signs of traction. 166 million in annualized recurring revenue, billions of compute hours, and growing institutional attention. The token design aligns incentives between providers and network, although long-term sustainability without extra rewards remains to be proven. Second, on the opportunity side, if AI demand continues to explode and decentralized models prove cost competitive, Aethir could carve out a meaningful niche. Also, other than Bitcoin, Depin is proving to be offering most clear use case for crypto. On the risk side, heavy token supply, a long vesting schedule, and fierce competition from both centralized clouds and other Depin projects are important to watch. Lastly, for now, Aethir sits at the intersection of AI, Depin, and tokenized infrastructure, three of the strongest narratives currently in crypto. Whether it matures into a durable ecosystem or struggles against better capitalized rivals will define whether Aethir becomes a long-term winner or just another early experiment. Okay, this is everything for today's video. If you want to read more of my materials on topics like this and others, you can check my Substack. Also, you can follow me on my X account for more daily insights and market updates. And if you want to check my educational content, you can check my website. Links for everything will be in the description of this video. And this is it for today. If you like the video, like and subscribe. It means a lot, as for this kind of videos there is a lot of time needed to make it. And see you in the next video. Bye.